Right, good morning, grade 12s. I'm just going to finish yesterday's lesson with you today. And with that, then also we are finished with chapter 3. All right, we are in the textbook on page 66. Okay, so yesterday we looked at the fiscal policy. We looked at the characteristics of the fiscal policy and then the components of fiscal policy. We looked at government expenditure and government income, revenue, and then also we looked at the budget deficit. All right. So today we're just going to look at the effects of fiscal policy measures. Right. Now, as I said yesterday, remember we said that the fiscal policy is closely related to the business cycle. All right. So the direction that the fiscal policy is going to take depends on where we are in the business cycle. Remember, I said yesterday that if the business cycle is in a recession or a depression and economic activities are decreasing, the government will be wanting to increase or stimulate economic activities. So therefore, they will be using expansionary fiscal policy. When the business cycle is in an upswing, a recovery or the boom phase, when economic activities are expanding rapidly and the economy might be overheating, creating inflation, then the government obviously wants to slow down the growth in the economy a little bit to stop the economy from overheating, and then they will use restrictive fiscal policy. Right. So I did mention yesterday that the fiscal policy is anti-cyclical, counter-cyclical. If the business cycle is going up, then the fiscal policy will want to push down. If the business cycle is going down, the fiscal policy would want to push up. Okay, so it counters what the business cycle is going to do. It moves in the opposite direction. Right. Now, when we look at the effects of fiscal policy measures, we're going to look at the effects of your fiscal policy on various aspects of the economy. And the first thing that we are going to look at is the effect of fiscal policy have on the income distribution. All right, now remember we did say that one of the government's goals are to redistribute income so that they can have a more equal distribution of income. Right. Now, when we look at fiscal policy, remember yesterday we did discuss the different tax scales, right? And a progressive tax scale, when the government uses a progressive tax scale, like in our country with the income tax works on a progressive scale. This means that higher income earners will pay a higher percentage tax. All right. And because higher income earners pays a higher percentage tax, and then that tax money is being used to subsidize services for lower income groups or to pay a social grant, for example. All right. So a wealthy person, a high income person would contribute a large amount towards taxes, and the tax money that is taken from that person can then be transferred to a poorer household in the form of a social grant or an education subsidy or free healthcare or whatever it might be. All right. So when we use a progressive tax scale, that does assist in reaching the state's goal of redistribution, because we take from the rich and we give to the poor. So by using a progressive tax scale, it will help the government in reaching that objective of redistribution to get a more equal distribution of income. Right, if we use a regressive tax scale, yesterday we said that a regressive tax scale is where higher income groups pay less taxes. The lower your income group scale, the higher the tax that you're going to pay. Okay, so poorer people pays more taxes on a regressive tax scale. All right, now I did also mention yesterday, obviously, that nowhere in the world is a regressive tax scale actually used, because it would be unfair. It is unfair to take from poor people who already have nothing and take from them and then supply services for the rich people. It's not supposed to work like that. So when a regressive tax scale is used, income distribution will be made even more unequal. Where you have an unequal distribution of income already, those inequalities will be made worse if we are going to take from the poor and give to the rich. Right. If we are using a proportional tax scale, where, remember yesterday we said a proportional tax scale is where everybody pays the same percentage, right? So there's a flat rate and everybody pays the same percentage of tax. An example of our tax, one of our taxes that is proportional would be VAT. VAT is proportional, and also corporate income tax is proportional. All right. So when we use a proportional tax scale where everybody pays the same, obviously it will have absolutely no influence on the distribution of income, because everybody pays the same, so the distribution of income is just going to stay the same. All right. So that go as far as taxes goes. Now remember, fiscal policy, there's got two instruments. It's got taxes and government spending. All right. So in terms of taxes, a progressive tax scale will help to redistribute income. A regressive tax scale will make an unequal distribution of income even more unequal. And a proportional tax scale will have no effect whatsoever. When it comes to government spending, obviously, in terms of income redistribution, like the way they do it in our country, spending on social goods, like free no-fee schools, subsidized public education, public healthcare systems that is for free, social security and the welfare payments. Obviously, those things are there to help the poorer people more than what it helps the rich people. All right. A wealthy person will have a medical aid. He's not going to go to the public hospital, right? A really, really wealthy person is probably going to send their kids to a private school, not to a public school. Definitely not a no-fee school. All right. So when the government spends their money, the way in which they spend their money can also have a redistribution effect. So the more money they spend on providing goods and services and subsidizing goods and services for the lower income groups, the more redistribution will happen. All right. And anything like the welfare payments, 100% is there to redistribute income. Okay. They take from the rich and they give to the poor. Right. The next thing that we're going to look at is the effects of fiscal policy on consumption levels. All right. Now, when we look in terms of taxes, both a direct and an indirect tax will have an effect on consumer spending. In terms of a direct tax, remember direct taxes are like income tax, right? So the minute that there's an increase in a direct tax, increase in income tax, for example, that means that the disposable income of households will decrease. The more income tax we pay, the less income we take home, right? And we can only spend money that we have. So if our income levels are decreasing, obviously we are also going to be spending less. If we are earning less, we can also only spend less. All right. So if there's an increase in a direct tax, it decreases the disposable income of consumers, and it will probably decrease their spending and consumption as well. Obviously, it all depends on their marginal propensity to consume, the MPC. All right. So of their income, how much do they spend and how much do they save, right? If people have a large amount of savings that they can use to spend as well, we might not see a huge drop in expenditure because people are then spending their savings as well. But people that do not have a large amount of savings, when their income decreases, automatically their spending decreases as well because they do not have savings to rely on as extra money to spend. All right, obviously, if you have saved before, you can take those savings out now and spend it, right? But people that don't have savings, they cannot have extra money that they need to spend now. Okay, so generally speaking, if there's an increase in the direct tax, in income tax, disposable income will definitely decrease, most definitely will decrease, and probably a person's spending and consumption will decrease as well. All right, that's in terms of taxes, your direct taxes. Right. Indirect taxes have an effect on consumption patterns of all households. Okay, remember, indirect taxes is part of the prices of the goods and services that we buy. So if an indirect tax like that increases, immediately everything that we buy is getting more expensive. And we are assuming people's income is kind of staying the same, right? So if everything is becoming a little bit more expensive, obviously people will not be able to afford to buy as much as what they did before. All right. So essential items, obviously, people cannot really stop buying essential items. Remember last year when we did elasticity, we did say, essential items, whether they're cheaper, whether they're more expensive, these are the things that we kind of have to buy to stay alive. But luxury items, they are more elastic, right? So if luxury items, if the prices of luxury items increase, we are more likely now to not buy them anymore. All right. But if indirect taxes goes up, it means almost everything gets more expensive. And people are rather going to buy their essential items. They will still be buying their essential items. So they might not be able to afford some luxury items anymore. All right. But consumption will definitely decrease. People will not be able to afford to buy the same amount of stuff as before if everything is getting more expensive. Right, that's your taxes. In terms of government spending, okay, remember government spending is an injection, right? And if we inject money into the economy, remember the multiplier effect. If the government injects, if they spend a small amount of money in the economy, that spending, that injection will multiply and it will lead to higher levels of income, production, and expenditure. All right, so government spending will increase total spending, consumer spending, because of the multiplier effect. Now, that small injection will multiply and it will create higher levels of income for people in the economy, and the high levels of income will lead to increased spending. Right, the next one that we're going to look at is the effect of fiscal policy on price levels in the economy. Right, again, if we look at direct taxes could relieve inflationary pressure by lowering aggregate demand if direct taxes increases. All right, so if we look at your direct taxes, if an income tax increases, we just said people's disposable income will decrease. If your disposable income is decreasing, generally speaking, spending levels will also decrease. All right. Now, inflation comes from two different places, but demand pull inflation, and we will do this in detail later on in this year, right? But demand pull inflation happens if people are spending a lot of money and the demand for goods and services is really big and we cannot produce enough. The supply is not enough to meet that demand. That is what is going to cause the price to increase. It causes demand pull inflation. All right. But if the government increases direct taxes and people have less disposable income and their spending decreases, it can actually decrease the pressure on prices from the demand side. Okay, so it can be used to decrease demand pull inflation. All right, but it can also result in cost push inflation by stimulating workers to press for wage increases to maintain their real incomes. So if direct taxes increase, we said, people's disposable income is going to decrease. And now people cannot afford to buy the same amount of stuff as before. So your workers, the working class, they are going to start pushing for higher wages. All right, if the government's taking more taxes away, the workers are going to want higher wages so that after they've paid their taxes, they can still earn a proper amount of money so that they can satisfy their needs. And if that happens and businesses have to pay higher wages, if a business has to pay higher wages, wages is part of that business's production cost. And if there's an increase in their production cost, they are going to put their selling prices up because they still want to make a profit. And if that happens, that is actually going to cause cost push inflation. All right, that's your direct taxes. Your indirect taxes, as I just said, indirect taxes becomes part of the prices of goods and services. If you think back to chapter 1, to go to market prices, we add indirect taxes, net taxes on production. If you've got your basic prices, you are going to add taxes on products, which is your indirect taxes. So indirect taxes makes things more expensive. And if there's constant price increases in like many different things, that is going to cause inflation eventually. All right. So indirect taxes directly, it has a direct effect on the prices of goods and services. it will automatically make the prices go higher. Right, now this is the important section. Okay, the next thing that we're going to look at is the effect of fiscal policy on incentives or disincentives. All right, now I'm first going to talk about taxes. That's the most important one, and then we will look at government spending quickly at the end. All right, now we did talk about this, we referred to this in class before all of this happened, right? But a direct tax can potentially reduce a person's incentive to work or to save or to invest their money. Right, especially if we are using a progressive tax scale. The minute that people start feeling that the taxes that is asked is being unfair, right? If tax rates goes really high, the percentage of tax that people have to pay is really high, and this happens with the progressive tax scale especially, then it can discourage some people from working harder. All right. Remember, we work on a progressive income tax scale. So let's say I am paying 25% tax. Now, my tax scale that I'm in, I have to pay 25% tax. Now I work really hard. Now I go to work early. I stay at work late. I put in extra hours. I work overtime. I'm really committed to my job. And then I get a promotion. Together with this promotion, it also comes hand in hand with an increase in salary. Now, because I'm earning a higher income, it pushes me into a higher tax bracket. And instead of now paying 25% tax, I might have to pay 32% tax. All right. It is called a tax bracket creep. All right. If you start earning more money, and then it moves into a higher tax bracket, you pay a higher percentage tax, and in some cases, extreme cases, it can mean that your disposable income is actually less after your taxes once you have that increase, all right, because of the higher percentage tax that you pay. All right, so this is going to discourage people. Now, I'm not going to work those extra hours. I'm not going to want that promotion, because if I get the promotion, I have to pay more tax. All right, so a high or progressive tax scale serves as a disincentive to work. All right, people don't want to work harder. They don't work extra hours. They don't want to get that promotion, because then they have to pay more taxes, which means they have less income. All right. Now, what it also means is sometimes if people feel that the tax scales are unfair and the tax rates that they have to pay is unfair, it means that some people are going to lie about the income that they are earning. Okay, that is called tax evasion. Now, there's a difference. I want you to look at these two definitions as well. Okay, there's a difference between tax evasion and tax avoidance. All right. Tax evasion is when people lie about how much income they're earning. All right, so they fail to report their income. Okay, they declare some of the income, but some of the income they try to hide. They don't declare all of the income. They don't tell the SARS people about all the income that they are earning. They lie about how much income they're earning so that the income looks less, so that they pay a lower percentage tax. Tax evasion is illegal. All right, not allowed to do this. People do this, but it's illegal. All right. Tax avoidance is legal ways to reduce the tax burden. All right. There is, for example, tax allowances, like, for example, medical expenses. Now, if you belong to a medical aid and your medical aid is exhausted, and there are certain medical expenses that you pay for yourself, those medical expenses, provided that you have proof of those expenses, receipts or whatever to hand in with your tax returns, the extra expenses that you've paid for, they deduct that from your tax burden. Okay, they reduce your income, and then eventually you pay less tax. That is a tax avoidance. It is legal things that people can do to reduce their tax burden. Donations, for example. Okay, a lot of businesses, you hear them, and they donate a lot of money to charity, right? They don't always donate that money because they care about the cause. They donate that money because they use it as a tax write-off. It's tax avoidance. All right. There's obviously maximum amounts. Otherwise, everybody's going to donate all of their money so they pay no taxes, right? But businesses use the donation. They make a donation because those donations are subtracted from their taxable income so that eventually they pay less taxes. But that is legal. There are certain things that the government allows us to do to reduce our tax burden. But lying about how much income you are earning and not declaring extra income. For example, right? For example, if I'm a teacher, I'm paid by the government. Obviously, I can't lie about that income. They will obviously know about that. But maybe I provide extra lessons, okay? Especially like, not my subject maybe, but maths and accounting teachers or whatever. So they provide extra lessons. Now, there's a teacher that provides extra lessons. She has got 10 kids that come for lessons, and she charges them each 1,000 Rand a month. Okay, 1,000 Rand a month for one lesson a week, right? If she's got 8 children coming, that's 8,000 Rand extra income. All right. Now, when she does her tax returns, she's supposed to put on the tax return, I'm earning an extra income every month of 8,000 Rand. If she doesn't do that, that is tax evasion. All right. And people do that. Okay. Obviously, if it goes into your bank account, you cannot lie about it. You can, but at some point you're going to get caught. Now, if they audit you, you are going to get caught. But a lot of people insist on being paid in cash. Now, that money that you get in cash, it doesn't go into your bank account or anything. That is not traceable. All right. And that is how people evade their taxes. As soon as there's a cash transaction, they don't declare those cash transactions. They keep that money in cash and they spend that money in cash, right? That is tax evasion. People do that because they feel the tax that they have to pay is unfair. And the higher the tax, obviously, the more people are going to feel that it is unfair. All right. Now we look at this Laffer curve, right? And this is something that they ask all the time in an exam, okay? So this is very, very important, okay? And I want you to listen to this lesson now, and then you're going to listen to this lesson again so that you make absolutely sure that you understand this Laffer curve. All right, what is great about these video lessons also is that these things are going to stay on your phone. You are not going to delete them to make space for selfies. You are going to leave them on your phone, or you're going to put them on an external hard drive or on your computer at home so that every single time that you write exams, you can come and listen to these lessons again, because that is going to help you in your studies, okay, especially with these things that needs to be understood. Right. So what we use is we use this Laffer curve to help us to understand the impact of taxation on the work effort. The Laffer curve, if you look at the horizontal, the vertical axis, you'll see that it says tax revenue. It will be a Rand amount. And then on the horizontal axis, it will say tax rate, the percentage of tax that people have to pay. So the Laffer curve basically shows us the relationship between tax rates and the tax revenue that is collected by the government. Okay, now, if you look at this Laffer curve, obviously if the tax rate is 0%, in other words, the government doesn't levy any taxes at all, that means that your tax revenue will also be 0. It's here on the axis. In the point of origin, it's 0. Everything is 0 there. All right. So at a 0% tax rate, the government is also going to get an income of 0. No revenue at all. Right. If we move to a point like point C, to go from point B to point C, okay, there's no values on this graph, which makes it now a bit difficult there, but you must use your imagination. All right. Let's pretend that at C, the tax rate is 10%. Now, let's pretend. All right. So at a tax rate of 10%, if the tax rate increases from 0 to 10%, obviously at point C, there will be some kind of a revenue. The government's revenue will increase from nothing to whatever is there at point C, R1 million, or whatever it might be. All right. If the government decides to increase tax rates even more, and we go to point A, all right, at point A, let's say the tax rate there is 45%. All right, at 45%, if we increase the tax from 10%, which is at point C, to 40% or 45% at point A, again, the graph is still sloping upwards, right? So revenue is still going to increase from point C to point A. Revenue is still going to increase. So by increasing the tax rates, the government can still be increasing their revenue. At point A is known as the optimum tax rate, because that is where the tax rate, that's the tax percentage, whatever would be here, 45%, whatever's there, that would be the tax rate where the government will maximize their tax revenue. Okay, if we go from point A to point E now, and the government, let's say, increases their tax rate from 45% to 80%, let's say, now let's pretend that's 80, right? At point E, government revenue will now, from point A to point E, increasing the tax rate is going to have the effect that tax revenue will decrease again. All right. Why? Because people are now thinking that the tax scale is unfair. People refuse to pay these high tax rates, and that is where the tax evasion is going to start. That is now where people are demotivated. They don't want to work harder. They don't want to earn more money, because it's going to just mean they have to pay more taxes. Yeah, they feel the tax rates are unfair. They are going to start lying about their income. They're not going to declare all of their income, and then the government is going to lose revenue. If we go from point E to point D, at point D, the government wants us to pay 100% tax. So every single cent that we own, we are going to give to the government in the form of tax. Nobody in this country is going to be willing to work if the government is going to take all of their money in taxes. So again, that is why the graph goes right back to the axis again. Taxes is 100%, income will be 0. So if the government charges a tax of 100%, their revenue will be 0. Okay, so we just quickly run through the theory here. Okay, you'll see it says at a certain point, an increase in taxes will cause a decline in the revenue of the government. Okay, that would be, for example, on the graph, point E. If they increase the tax rate past this point, tax revenue is going to decrease. The graph has a negative slope after point A. All right. So in other words, if taxes are too high, the government can end up with less revenue. It might be better for them to have a lower tax rate and increase their revenue. And as I said, if the tax rate goes too high, the reason why that tax revenue decreases is because of tax evasion. Okay, now that's basically all this theory, right? I'm going to go back to the theory just now. I just want to, for example, ask you in an exam, what kind of questions will they ask? All right, what kind of questions can they ask based on the Laffer curve, right? If there's no heading, okay, there's no heading on the graph, they can ask you what is represented in the graph above, or in the illustration above. If you see this loopy key, you see tax revenue, tax rate, you know this is the Laffer curve. All right. They can ask you, for example, what will be the optimum tax rate? Okay, then you know at point A, whatever the tax rate is here at point A, that is where revenue is maximized. Okay. They can ask you obviously a definition. They can ask you a definition of a Laffer curve, in which case you're going to say, it shows the relationship between tax rates and tax revenue collected by the government. Okay, then they can ask you, explain what is going to happen when the government revenue increases from, let's say, 10% there at point C to 45% at point A. Right, then obviously there's going to be values there. So in your discussion, you're going to say if the tax increases from 10% to 45%, government revenue is going to increase from whatever's there, 1 million, to whatever is there, could be 10 million. All right, you just look on the graph. Okay, but then they also like asking, what is going to happen if the tax rates increase from 45%, yeah, okay, we're pretending, remember, to 60% there at E. All right, and then without thinking, some people say, oh, if the tax rate increases from 45% to 60%, government revenue will increase. That's exactly what the Laffer curve is about. It will not. Look on your graph. The graph is there for a reason, right? This is where the graph starts to go into a negative slope. So if the tax rate goes from here to here, your tax revenue is decreasing. You have to base your answer on the graph. All right. They can also ask you, Now, what is the implication of 100% tax rate? Then you have to say, obviously, well, if the taxes are 100% tax rate, the implication for the government is that they will receive no revenue at all. Not their revenue will decrease. Now, at 100%, they have no revenue. The government will have no revenue at all. All right. They can ask you, why is the tax revenue decreasing from point A to point E? Then you're going to say, for 4 marks, basically, you're going to explain, right? When the taxes are increasing, people are feeling that this tax increases are now unfair. It's a disincentive to work. People don't want to work harder. They don't want the promotion, da-da-da-da-da. And then you're also going to explain about the tax evasion. When people feel the tax burden is too heavy, it is going to encourage them to do tax evasion and lie about the income that they receive. Right. That is your Laffer curve. All right. Okay, that's just the rest of the explanation on the graph, right? In terms of government spending, okay, it's incentive or disincentive. We're still busy with the same heading. All right, once the government pays a grant or a subsidy, those things, when the government pays a subsidy, that is an incentive. A tax is a disincentive. Taxes are used to discourage people to do certain things. A subsidy is given to encourage somebody to do something, right? It serves as an incentive. Okay, so for example, if the government pays out an export subsidy, the idea is that that business is supposed to increase their exports overseas. The government wants them to do more of what they are doing. All right, so it serves as an incentive for the purpose that they are used for. So for example, if there's an education subsidy, they want people to be in education. They want more people to receive an education. They want to encourage education. All right. So taxes is a disincentive. It discourages people to do certain things. Government spending can be an incentive when they pay out a subsidy. Subsidies is part of government spending. All right. The last thing for today and for this week and for chapter 3 is discretion. All right. Now, obviously, the Minister of Finance, when he does his budget, he can use his discretion to decide by how much to increase or decrease income tax. And it's his decision on how much he's going to spend on infrastructure, on education, on whatever. All right. But the fiscal policy lays down certain rules. All right. There is a rule. Okay. These are the rules. The deficit rule. Okay. There is a rule that when the Minister of Finance does his budget, remember we said we are budgeting for a deficit. We normally plan to spend more than what the government is going to receive. But the rule is that deficit should not exceed 3% of the GDP. All right, you must remember this. They like asking this in short questions also. All right, the deficit rule, when we budget for a deficit, it's fine. We know that we are, but that deficit may not exceed 3% of the GDP. That's a rule. All right. The borrowing rule says that when the government is borrowing money, borrowed money can only be used for capital expenditure. All right, remember, according to the economic division, government has current expenditure, like the wages and salaries that they have to pay. They do transfer payments and grants, okay, like the social grants and whatever. And then they do capital expenditure. Capital expenditure is when they, for example, invest in infrastructure. All right. So the government may not borrow money to cover their current expenses or their transfer payments. Borrowed money may only be used to pay for capital expenditures. Right. Okay, as I said, current expenditure must be covered by their own income. Right. And then the last rule is the debt rule. That means that public debt and guarantees should not exceed 60% on the nominal GDP. This is the one time and the one time only that we actually care about the nominal GDP. All right, remember every time we talk, it's like real GDP, right? But this is the one and only time that we actually look at the nominal GDP. When the government borrows money, it may not exceed 60% of the nominal GDP. All right, within these discretionary rules, the Minister of Finance can use his discretion. All right. Today's lesson, okay, it's not an essay topic. It is a discuss for 8. Okay, they can discuss for 8. Sometimes they ask you to draw and explain the Laffer curve for 8 marks. In many cases, they give it to you as a data response question. All right. But the other stuff as well, not just the Laffer curve. the other topics that we've covered in today's lesson. What is the effect of fiscal policy on consumption patterns, on income levels, on price levels? That can also be 8-mark discuss questions. All right, it is a very important section. All right, so basically we are finished with chapter 3 now. You will see in your textbooks the next topic is the public sector failures. I have taught public sector failures already. It was the one afternoon class. In the one afternoon lesson, we did the public sector failures. So today now officially we are finished with the theory of chapter 3. I will just keep sending you these 2 or 3 activities of chapter 3 that still needs to get done, but we will do that next week. Okay, I'll send them as I want you to do them. The essays are over now. Okay, so the activities are not that long now anymore. All right, but then next week we will start with chapter 5. All right, enjoy your weekend and rest a little bit. All right, see you next week. Bye-bye.